Hey guys, it's Simon with Trading Perform Coaching. Wanted to go over today's swing trades quickly and how they unfolded for us. Really volatile day in the market. And so first of all, to let you know, we followed our rules, right? Whenever we have a gap down or a gap up, we wait the first half hour so that we do not get run over. We don't want to get run over if it rushed down and if it rushed up. And this chart looks relatively harmless until you start looking closely at it, all right? And if you realize that, the average ES day is plus or minus 20 to 30 points, right? And you look at this first bar is from 1870 all the way down to 1830. It's 40 ES points, 5 minutes, guys. Don't want to lose money? Easy way to do that. Sidestep the most dangerous times of the day. A lot of this was forced liquidation early in the morning by brokerage firms where our clients had margin calls right out of the gate. And you got to have a trade plan if you're going to trade on leverage, guys. You also got to recognize where your opportunities exist, and the swing trade indicator helps us with that significantly. So this is where we get our first swing trade, and there's 4 points of potential entry, and I'm going to draw that for you. Generally, the entry goes like this. If you imagine overnight, we push down, we push back up, and then on this bar right here, that's this bar right here, that gave us our number one entry. This is entry 1. The 50-60 retrace here is entry 2. If there were a support resistance zone back here, that would be entry 3. And then the entry that we really would have wanted would have been entry 4 that exists right here if the bar closes back above the support resistance line. And you're going to see that while that did not kick in this particular first long trade, it helped us in 2 essential ways. I'm going to show you how. So first of all, if you look closely, what you'll see is we're following our trade plan. We're not trading in the first half hour. At about 8:50, right, we get our swing long indicator. So we know 2 things at this point. First of all, we know that we don't want to be pressing our shorts to the long side. And the second thing that we know is we now want to look and see, number 1, if we can get a break below the low of the day and a trap back in to set up our number 4 and highest odds entry. The next thing we want to do is sidestep any shorts, assuming you can handle the stops that are required from an extremely amazingly wide swinging day. And so what we did was this. We were looking for entry number 4. It was prior to 9 o'clock, and unless I got an entry number 4, I really wasn't going to take a trade. But if you'll look here, here's our Fibonacci 50-60 retrace. Here was entry number 1, the most aggressive. Here's entry number 2, second most aggressive entry. And here's the important thing about this, guys. What do you want to know when you're trading? If you look at all the great traders, what you want to know is you want to be able to sit and observe and know that what you're seeing, what your signal is telling you, is going to give you an entry that whether you take it or not, when you do take it, will give you a high odds of getting paid. Entry number 2, right? What's the original swing out of number 2? It gave you a rotation from 1860 all the way up to 1930. That is 70 mind-boggling points to the upside. The indicator is worth its weight in gold there. Let's continue to look. And if you'll see, I've erased all the support and resistance zones that I have normally posted on my chart to make it easy for people to see where the swing comes in. And if you look later in the afternoon, later in the morning, it seemed like an eternity, it seemed like afternoon, but at 11:20 in the morning, we get our swing short indicator. And you can see the range is so wide here that it looks super tiny, but this is actually a massive amount of space. Let's bring this up, okay? And I'm going to go right through step 1, 2, 3, and 4 again, so everyone can see it. Swing short indicator right here. Again, I'm going to draw this out for y'all. Push up. This bar, which is right here, gives you entry number 1. The 50-60 retrace from the swing high at the time, this would have been approximately entry number 2. Now, if you took the most aggressive trades, generally speaking, the stop is 1 point behind the swing high. Now, this is really critical. If you take the most aggressive trades, you have to make sure that you're willing to take entries 3 and 4 if they occur. And I'm going to draw this out for everybody so everyone can see it. And if we pull this down, I'm going to grab a vertical line and I'm going to show you that what we're looking for at this point, from where this is where we triggered, right? So originally, we're looking for the market to trap back in. There is no entry 3 here, right? Because the market's so volatile today, there really is no viable zone to get an entry number 3. This right here is entry number 4, and what we are looking for is for the market to close back in on a 5-minute bar after closing out of the range on a 5-minute bar, then closing back in. This is our trigger entry to the short side right here at 1938 and 3/4, 1939. Our stop on this trade from 1939 is all the way up here, 1 point above the high. The high is 1950. The stop is 1951 even. Okay, now this is important. When the stop is so wide ranging, you have to call an audible or make an adjustment, because reasonably, I'm a leverage trader. I cannot absorb what would have been required here would have been a 12-point stop. That is out of my range for my normal trading size. I do trade leverage. So I took a reduced trade size in here, and what I did was I took either a quarter or a fifth, I forget at this point, of my normal trade size. But then I also said that if we could get a 50-60 retrace back up here, which put me roughly at 1943, that I would increase my trade size to 1/3. Again, the stop stays exactly where it was on the original entry. So entry number 4, we'll call this 4B, right? And then the market, and then if you'll also notice, we also established a new trap point. And again, I don't want to overcomplicate it, but if we could have closed above this trap point, then back in, that creates a new trap trade, assuming you're not already in the trade, right? So again, with such wild volatility in the market, you had to stay relatively small so you could stay in the trade. I think that was the key to the day. Again, remember what we're trying to accomplish, bigger term. I could care less about if this one trade works. If you watch the videos day by day, if you're in the room and you visit us in the room, and I encourage you, if you want to learn to trade, learn to be a successful, consistent trader, right? It's only for serious traders, but if you want to be a serious, consistent trader, right, and stack chips day by day, you don't care whether this one trade works or not. What you care about and you're clinging to is your trade plan. You want to be almost like a crazed religious zealot about your trade plan. I know we are in the room. And so this trade gave us 2 entries. This gave us a reasonable stop. 43 to 51 is sub 10 points, considering we're having over 100 points of ES range today. And then sometimes you get extremely lucky. My stop's 1 point above the prior swing high at 1951. The high of the day is 1950.75. I was pretty sure I was toast on this trade. As it was, we did not get stopped. And then the other adaptation that we made for this high volatility environment was that we scaled every 5 points. So in this particular case, since we moved our price up to 1943 for our entry, our scale was 1938, 1933, 1927, and then finally I forget where the last cover was, but it was right in here in the 1922 to 1923 range at the low, at the swing low before breaking lower. We were all out. Plus, I think our best scale was 19.5 points to the short side. So we had a risk of about 7 to 10 points depending on where you entered, and we had a better than 2-to-1 risk-reward ratio. Now, the formula got a little crazy in here. Again, you'll see one of the cool things about the methodology was if no trap is created to the upside, you never get an entry number 4. The focus, again, is on entry number 4. I should change the name of the trading methodology to simply entry number 4 instead of the swing trade indicator, but it is the rather generic swing trade indicator. It's something that I worked for a long time to develop, this entry method, and it proves to be very consistent and very successful. So we print here, we do not get an entry number 4, we get an entry 1 and an entry 2. I took entry 2 today because I really thought we had a chance of shooting back to the top and retesting that 1950. I figured we had rolled 30 points off the high. That proved how foolish I was, and I was immediately stopped here when we broke 1 point past the swing low. Important point here. I cannot stress it enough. Even though I got stopped here, the key to this would have been taking entry number 4 if it came down. Well, if you look, as we continue to push down, entry number 4 first pulled down. Here is 1, entry 2, stop. Right now there is no entry again. This would be the entry if we trade below and close back above. Never occurred, 1922.50, right? The next entry point, you'll see we need 3 bars that kind of line up together. This is the first place we get it. That brings our entry. For entry, we'll call it 4B, all the way down to 1907 3/4 never occurs. But then if you look, we get it one more time. It pulls all the way down here to 1885, 1886 essentially. So here's the deal. This trade occurs so late in the day. There's simply, if you saw how thin the dome was, you had to be crazy to take the trade. We finally closed back above, but it's such a severe squeeze above 1886 that there is never a valid entry point. It simply squeezes back above the trap point and flies from 1886 all the way to 1925. Here's the key to this. We know not to press our shorts anywhere in here. Why? Because our swing short is working. Just like we know to press our shorts, well, our swing long is working. Just like we know not to press our longs and to focus on the short side when the swing short is in. Same thing with the swing long over here. We get swing long over here. No one gets, we were looking for an entry if this could have taken place a little bit earlier in the day, but no one gets crushed to the short side. This is a tough environment, guys. When we're moving from 1870 to 1920 back to 1865 by the end of the day, what you need to hold on to is an indicator that'll tell you which way you should be leaning. Secondly, you need a solid trade plan. I cannot tell you, we are closing out at new highs for the year today in the room. It's an amazing, amazing feeling to be able to survive, to have a methodology that survives a market crash and still gives us opportunities even on days like today. I hope everyone has a wonderful day. I encourage you to come and spend 5 days in our room, see what we do. I bet it'll make you a better trader. And you can do that at absolutely no obligation by simply sending me an email to tradeandperform@gmail.com. I'm helping turn traders who are struggling, going through boom-bust cycles, consistent losers, into, first of all, break-even traders and then winning traders over time. I hope you'll join us. Have a good night, guys.